Friday, April 21st, market analysis. Stan Ehrlich, good morning. You guys know I start out with the stock market indexes, typically Spider, Diamond, Triple Qs, maybe the 2000, Russell 2000, if it's relevant. This morning, we saw an attempt to make new lows for this small, so far, move down, and we did, but not by very much, a tiny bit. Since then, the S&P has come back up to approximately unchanged. In fact, it's only down 15 cents at the moment. That's ticks. Nothing to speak of. It hasn't gotten close to yesterday's high. There's been no significant strength. It's only held approximately at yesterday's lows. I expect to see more weakness. I'm looking for gaps to be closed down around 396.5, 397. It may take another week or two if it happens, but that's what I'm looking for. Right now, I need some more conviction that the couple days ago, that the new high a couple days ago on the opening at the top of a resistance area was the rally high. It's not uncommon to see it happen that way. We didn't even close lower on that day, but 2 days ago, we slipped a little. Yesterday was convincing. We made new lows for 4 days, a new low close for 5 days. Now we're just hanging on, going sideways. Again, dead unchanged right that minute, second, right now. Green 000. All right, so slowly but surely it's starting to come back. It is early, by the way, on this recording because of obligations. It is 9:18 California time. Now, enough said. I'm looking for more of a break. I think I caught extremely close to the rally high during yesterday's morning's recording, and it did work out pretty well. But again, I'm not seeing any zip, pop, bang to the downside. I kind of think it was going to drop off a little faster than it has so far. But this looks like a typical bull market, which climbs a wall of worry. That's the old-fashioned saying. Bull markets crawl a wall of worry while bear market crashes. Panic time. So let's look at the DIA. On a daily chart basis, it should be doing about the same thing, and it is. It's an inside trading range, or today's low is just barely noticeably lower by a very small amount than yesterday's low, just like the S&P. We have had three, not just two, but three bearish engulfing signals, and so far, the third one only on Tuesday has been working perfectly. Since we're going sideways today, there's no real change. And again, we're down 12 ticks, nothing to speak of. So I'm looking for more weakness, a lower close I expect. If it's higher, certainly not above yesterday's high. So somewhere in that time price range unchanged to near yesterday's high, but lower probably. And hopefully making new lows. At the end of the week, a weak close could start off the next week a little bit weaker, and that's kind of what I'm expecting and hoping for. Remember, there's a gap to close here also around 330, 329. There's another one that's significantly lower than that, but I doubt that that one's really going to get closed. It's a very small one also, and it was mostly closed already, but that one hasn't had any attempts, and it seems to be within reach. And just eyeballing this real quick, it looks similar to a 50% retracement maybe. Okay, next chart, it would be the QQQs. And again, I've got to make this fairly short and quick today. So the Qs have certainly made it lower than yesterday's low by a chunk, not a huge amount. And it is currently actually higher on the day by 25 cents, barely, and near the high of the day so far, and a little higher than where it opened. So we are seeing some strength come back. We have this gap to close, and this is the one I'm expecting on the QQQs again during the next several days, and that would be coming down to, I don't know, 308 and a quarter. That's pretty much it. Don't want any follow-through strength. If we get any strength, very small, very short-term lasting, hours maybe. That's about it. Let's go to futures. The S&P 500, of course, has hit some resistance and stopping and overbought at the same time. Exactly the same commentary for the spider. And this is the E-mini. We are currently around unchanged, just a little bit lower. For the actually three and a quarter. And we did get a tiny bit below yesterday's low. Remember, the charts are a little bit different for the E-mini and the micro E-mini because of the time frame that they are open, which is significantly longer than the S&P SPY index. So that does change the price range sometimes, not always. And they should be looking extremely similar, but not exactly the same. Okay, anyway, we're still in the sideways trading range. We need to close below 4,093.80 or so in order to get another little bit of a wave down, so to speak. And that would be maybe to 4,004, somewhere in that ballpark. It seems to fit very well, but there's no gap on the E-mini because it was open pretty much 24/6, put it that way. Next chart. Bond and 10-year notes. They held a support. We talked about that coming up before it happened, during its happening, and now after it has happened. Now we're slightly lower today, and we did make a slightly higher high for a couple days. Interesting, nothing particularly profound yet. But again, that's how bottoms start. They don't necessarily jump up and down and ring a bell for you. So I'm liking what I'm seeing. I just need to hold probably 129.17-ish on any downside dip, and we were a little bit above that so far today. Let's see what happens. And the same kind of commentary goes for the 10-year notes. It hit support, got close to being oversold like the bonds, and is trying to work its way higher, but at the moment, slightly lower on the day. So I'm friendly, and in both cases, I say every day I'm expecting a long-term major bottom to be building here. And this could be a significant buying opportunity. We're still very close to the very lowest low for this dip. Next chart. Crude oil. And we have a gap that's in the process of being closed. Now, what I've said all along is gaps are almost always closed. They tend to suck the price back into the gap area like a black hole in space. Sucks everything into it. So is it done? We have a lower low, but it's not quite closed completely, probably 75, 80% of it. And now we're higher on the day, trying to have a reversal of some sort. I can't say. I still think the gap could be closed completely, and there's nothing wrong for it to go a little bit lower than the gap closure. I'm thinking at the maximum to the downside, 72.67 for crude. But somewhere between the gap closure and a little bit lower should be an oversold condition or extremely close and a support area and all kinds of reasons for the market to turn around and start to head back up again. Next chart. Heating oil. Getting oversold for the second day. Around support. I'd be a little bit better if it's touching that green dash line, the upper green dash line. If you can get below the higher of the two green dash lines, then you're very likely to challenge the lower line also. And if that is broken, which you might begin to expect depending upon how it does it, we have a major long-term bearish signal. Now we got a sell signal smack on top of that rally with the ER sell signals. That's the red bars, and exactly on the high day right there, and exactly on the high day right there. I don't think I see too many systems that can claim they pick turning points that accurately. Next chart, blow my own horn there. So natural gas, neutral at the moment. I think it's likely to make lower lows. So I have to base my commentary on the long-term trend. But look, it's lost momentum almost completely and going sideways now. Support got broken, and then it popped back up above it again, where it is for the last few days. I'm neutral for the moment, but a tendency to be a little bit bearish. Next chart, gold. Looking a little toppy, guys. You know, this is a new low close and almost another new low for a couple of 3 weeks now. That is causing me some significant concerns here. We don't have any bearish signals. We have a little bit of a blocky top that's forming, but guess what? I've got some things to say about platinum and silver now, both and platinum, that are going to turn out to be not particularly bullish. So let's go to the next chart, which is silver. And do you see what I see? That could be a little shoulder right there. And this is a very small pattern. It's only about a month in size, but they come smaller. But they're typically a month, 2, 3, 4, 5, something like that in size for head and shoulder tops and bottoms. Now, if that's true, then the last sell signal, which is smack dab on top of this market so far, and we're about to have a new low close since that sell signal, plus the fact that it got back on a retracement the next day within my allotted amount of time, and we almost sold the high of the retracement. We're now seeing a new low almost and a new low close, probably. So there could be a head and shoulder top. The last shoulder was yesterday's high. It's small, not particularly big. Let me blow it up for you a little bit. Maybe it'll look better blown up. So yesterday, shoulder high, red, bearish engulfing, ER sell signal, the high of the move, the head. And in the last shoulder, not the highest high, unfortunately, we have another bearish engulfing ER sell signal. It's a bogus signal, by the way. It's based on a false price range on Friday, Good Friday, when the market really wasn't open, but they had apparently planted open, high, low, close ticks in many markets because of a whatever exchange reason. But that really shouldn't be read. It was fooled by the exchange tick. Enough said. We picked the top. That's the important thing. Now let's look at platinum. Although we have new highs for months, and although we picked the low before this rally to the exact day, this is now extremely overbought, 87-ish. You get in the 90s, it's almost a done deal. Almost. And we're getting there. This is about to top out. It's too overbought. It's been this way for 4 days, and then 2 days before that, one day in the middle of less than overbought levels. So the last two signals, not that I'd like that, continue the winning streak, was a fantastic sell signal on the top of that rally and a buy at the bottom. And that's all this year so far. Yeah, that was early January, wasn't it? Yeah, January 12th. So we'll see what we can get here. But I think this is now time to consider jumping off the boat, saying, thank you very much. What a ride. And let somebody else have another 2%, 5, 10% of the swing. But I've got no sell signal officially. Officially, I'm still long. I have to still be bullish, but I'm warning you, too overbought. Next chart, live cattle, sell signal 2 days ago, Wednesday, came back up for the ER3 entry, small loss on yesterday's close, but a lot less of a loss and almost breaking even on the dip so far. And we were profitable at one point. So it's coming down. I'm looking for lower levels, and I'm looking for a move down at a minimum to about 160. And I would not be surprised if it got back down where we had, of course, a buy signal at the bottom of the last move, almost the exact low day. And again, we had a sell signal at the top, but it was nestled between two highs, and that's not where I want my sell signals to be. I want my buy signals to be like that one, smack dab on the damn bottom of the market, and like that sell signal, smack dab on the top of the market. Okay, enough said. High grade copper, neutral, not much to say. Next, we are ruining my bullish expectations. New low close since the buy signal. So I'm going to go flat. And we actually did go flat probably 2 days ago if we were plotting the actual ER trailing stops, which we're not. That's available to you if you're interested. You know how to reach me, info@ersignals.com. So neutral now, bean oil, bearish because the trend is bearish. A couple of buy signals did not work very well, just barely on one of them. And I'm looking for lower levels. Next, corn, overbought. Here's your 2-day retracement so far. I'm kind of neutral overall. I think it'll come down to 641, then we'll take another look. Next, wheat. Trend is down. New low for the time period since the last bullish engulfing, which was on the low of the move, but it didn't go up very much. Hit resistance and stopped. So I'm looking for lower levels and the new lows, and probably down into the 640s. Next chart. Soybean meal looks like it's rolling over, starting to make lower closes and lower lows for a while. Not oversold yet. Could easily challenge, if not make new lows for quite a while, since the beginning of the year. Looks like a rolling top or a head and shoulder top. It's real sloppy head and shoulder, if you want to call it that, but kind of. We got a brand new today, first day in progress, buy signal on the ER system, ER signals automated trading system for live hogs. New buy signal today. We don't want to go below 84.60. That's our stop. We want to maintain prices a little bit above yesterday's high. I'm expecting to see higher highs very soon. This was almost oversold, but again, a week or so ago, it was. So we have divergence. I think I mentioned that yesterday. You have lower lows in the price, but not lower lows in the indicator. And now a buy signal. I'm liking that. Next, OJ got too strong too much, and it looks like it's topping out a little more seriously. Next chart. Cocoa, outside up day and an up move, close to overbought, can on occasion be a bearish engulfing signal, but it's a bullish candlestick engulfing, but the resulting effects end up being bearish. We'll see what happens. Sugar, too overbought, starting to come down, looking for a sizable retracement, probably down to 21, and we're back to the E-mini. So that's it, ladies and gentlemen. I'll see you on Monday. Have a great weekend. We're down 50 cents now on the spider, so it slipped while I'm yakking away here. And the DIA and, of course, the Qs, all of them are negative on the day, but not very, very much. But time always tells. Have a great weekend. Thank you.